3 reasons why blockchain is the most transparent way of trading in cryptocurrency industry. You may have heard the word blockchain, the record-keeping technology behind the Bitcoin network if you've been following banking investing for previous 10 years. Welcome back to our channel. So today we'll be sharing with you the reasons why blockchain is the most transparent way to trade in the cryptocurrency industry. Number 3, decentralized network. Blockchain allows for peer-to-peer transactions via a secure system. It is a public database of transactions that don't require centralized authority to move value where it belongs. Whether it's assets, digital commodities, gold, counterfeit-proof paper, cigarettes, tins of anchovies, gigantic stone heads, or currencies, it's decentralized and distributed, and it works like a large network with currencies traded based on the key metric trust. This has implications for a wide range of industries, particularly banks, which handle money flows and assist the unbanked. Consider fintech, which is already working with banks and startups to address some of the most pressing financial and loan challenges that clients face. Entrepreneurs, retail, politician, government, and other industries can all gain from this. It organizes data into bunches called blocks, which are chronologically connected together. If you update the information in a block, you don't have to rewrite it, and instead the change is saved in the new block. The distributed ledger and its immutable record of transactions are accessible to all network participants. Transactions are only logged once with the shared ledger, reducing the duplication of effort that is common in traditional corporate networks. You may trust as a member of a members-only network you will receive accurate and timely data from a blockchain, and that your private blockchain records will be shared only with the network members to whom you have specifically granted access after transaction has been logged to the shared ledger. No participant can edit or tamper with it. If a transaction record contains an error, a new transaction must be created to remedy the issue, and both transactions must be then visible. The infrastructure layer, network layer, transport layer, and application layer of the blockchain-based network architecture can be split, and it has the ability to change the network security paradigm and the existing internet operating style. When a transaction takes place, distributed computing ensures that every node in the network has a copy of the blockchain, which is constantly updated. It employs peer-to-peer architecture to do away with the need of central authority to manage the network, making it secure, transparent, and immutable. Another key purpose of the distributed network of blockchain is to keep track of the current status of the ledger. Despite the fact that there are miners are working on the block creation, the final block to be added to the blockchain will be made by a single winning miner, with all of the nodes acting as witnesses. Smart contracts Louis and Louis 2019, which are blockchain-based executable scripts written in a high-level turning complete language, are novel addition to the capabilities of blockchain technology. The purpose of this is to eliminate any third-party intermediaries between participants and to automatically execute and enforce the terms of the agreement between them. Today, blockchain research is one of the most active areas of computer science, having the potential to transform how we deal with trust in our society. Number 2, no Xeroxing plus ownership. The transformation of cryptocurrency bits into simplified, non-duplicate system encourages economics to trust digital currencies. It has the potential to open up a slew of new applications, particularly in the shared economy and across platform settings. Uber and Airbnb, for example, have already distributed the startup's ecosystem by adopting such technologies. They generate revenue within their own platforms. Its core virtue is that once anything is on the blockchain, it cannot be changed or counterfeited. And one application for the technology has begun to emerge is an ownership verification tool. Ownership might be used by blockchain enterprises to create doors to new markets. Members of these networks are more likely to connect with the brand, advocate the product, build trust, contribute to governance, and get a voice because they behave like owners. The ownership's record can be stored alongside all the information. The counterfeit goods sector costs firms trillions of dollars every year. It is extremely tough to prove that an item is fake right now. It would be significantly more difficult for a counterfeit to market his or her product as a genuine if firms began documenting their products on the blockchain. Consumers might then use a user-friendly, non-technical method to check that a product is listed on the blockchain, allows firms to gain more revenue and consumers to obtain real products. Provenance and transfers of ownership of goods is perhaps the clearest scenario where blockchain could be beneficial, and ledgerization is a particularly strong example. Several pilot studies and proofs of concept have been conducted, notably in Georgia, Sweden, and Honduras. When it comes to formalizing land's rights, it offers to identify property owners and the other users to and provide a permanent database of land use use rights transactions. It has the potential to improve land transaction management, give digital documentation to actors in the informal land rental market, and reduce land system inefficiency. The blockchain that underpins a digital currency like Bitcoin cannot prevent double spending on its own. Instead, all cryptocurrency transactions are recorded on a blockchain, where they are independently vetted and secured through a confirmation process. Transactions have been confirmed in this way, and Bitcoin and many other cryptocurrencies became irreversible. They are posted publicly and stored in eternity. The process of verifying Bitcoin transactions takes some time, since it requires a lot of number crunching and complex algorithms that require a lot of computing power. Because of the massive amount of computing power required to clone and falsify the blockchain, it is extremely impossible to do so. Number 1. End-to-end encryption. All network participants must agree on data accuracy, and all confirmed transactions are immutable. Because they are permanently recorded, a transaction cannot be deleted by anyone, not even the system administrator. Each block is linked to the blocks that come before and after it. To avoid detection, a hacker would have to change the block containing the record as well as those linked to it, making it difficult to tamper with a single record. Cryptography is used to secure the records on blockchain. Participants in the network each have their own private keys, which are associated with transactions they conduct and serve as a personal digital signature. If a record's signature is changed, the signature becomes invalid and the peer network is notified immediately. The importance of early notice in preventing future damage cannot be overstated. The SHA-256 hashing method is commonly used as the hash function in blockchain. This benefit from cryptographic hash functions in the following ways. The avalanche effect occurs when a small change in the data causes a substantial change in the output. It is maintained by numerous network participants who are accountable for data security. Since it is decentralized, that makes the most important characteristics that contribute to its high level of security. It is disseminated, for example, over networks that are peer-to-peer connected. These are updated on a regular basis, so they're always up to date. There's no single point of failure or access because there is no connection to a centralized location. Although the ledger system is decentralized, members of the specific blockchain have clear access to information. Any transactional data that is encrypted onto its blockchain can be recorded, passed along, and viewed by all members or nodes. This technique builds confidence while also ensuring data integrity. In essence, blockchain's distributed nature prevents it from being hacked. Blockchain security is a risk management system for a blockchain network that employs cybersecurity frameworks, assurance services, and best practices to decrease the risk of attacks and fraud. Security differs by blockchain type. Who may engage in blockchain networks and who has access to the data can vary. Public or private networks are often branded as public or private, indicating who is permitted to participate, or permissionless, indicating how users acquire access to the network. Anyone can join a public blockchain network, and participants are often anonymous. A public blockchain validates transactions and achieves consensus using a computer connected to the internet. Bitcoin is a most well-known example of public blockchain, and it uses Bitcoin mining to establish consensus. Miners or computers on the Bitcoin network attempt to solve a complex cryptographic problem. Private blockchains rely on the identities to verify membership and access credentials, and often only allow well-known companies to participate. The group get together to form a secret member-only business network in a permission-provided network. A private blockchain obtains consensus using a process known as selective endorsement, in which recognized users validate transactions. The transaction ledger can only be maintained by members within the particular access and permissions. This type of network necessitates greater identification and access management. Today, blockchain technology is being used in a variety of industries without the involvement of centralized authority. So welcome to the blockchain world. Guys, we're now reached the end of the video. We hope you enjoyed it. We look forward to seeing you in the future videos. Stay tuned until then.